Good morning, everybody. Mike and Corey here today. We had a nice green day yesterday after the CPI report came in. Inflation is cooling a little bit, so we like that news. I'm going to talk about tax credits in 2025, things that are up for negotiation, specifically the child tax credit. Talk a little bit about the CPI and then get into, Corey's going to talk about the reaction in the 10-year bond, which was also favorable, at least to start. So, but before we get started, must remind you this is a financial education presentation. You must do your own due diligence on anything that you hear in this presentation. More disclaimer information can be found on ankerstarwealth.com, and the opinions expressed are mine and Corey's alone. So I always like good news. So what I'm going to start off with is this is the S&P 500 year to date. And if you look, and so really, we're only 15 days, 16 days into the year, so it's not a big graph yet, but you can see that it initially last week was below where it started, which means it was down. But after yesterday's surge, you can see the big jump up, and now it is 1% positive. So don't worry about the red number there. That means it's just down a little bit today. It may switch green before I even get to the next screen. But it is up 1.03% positive. And you may say, why does that even matter? And honestly, in the short term, or even in the long term, it really does not matter. But where it matters to us, where it matters to you, is typically when you look at historical data, when we have a positive January, the year tends to be pretty good. It tends to be over 12%. I want to say the average might be 15%. But when we have a negative January, the year is almost like break even. And some of you may be sitting back going, well, wait a second. So he's telling me, wow, if we have positive, I should invest all in and it's going to be a positive year. And if it's negative, just sit out the market that year. No, it doesn't always work that way. There's certainly exceptions to it, and you don't want to miss those gains. But one of the things that we look at is how January goes. Last January, positive. On the year, positive. So that was good news. And maybe it's just the year starts off feeling good, so investors feel good and therefore invest and not sit to cash. So that was one thing I wanted to hit. Why might you feel good or have concerns or be even optimistic with a new administration coming in? So if you remember, there was the Tax Cuts and Jobs Act of 2017, which was put in 2017, the last time Trump was president. That is set to expire in 2025. Well, Trump's back in office. I guess when he put it in 2017, he probably never envisioned he'd be in office in 2025. He probably envisioned he would repeat and then he'd be out of office by then and someone else would deal with it. Well, he's back in office, so he gets to deal with it. The good news is there's bipartisan, both parties support for tax breaks, especially on things like child tax credits. So there's definitely not bipartisan support for all tax cuts. But when it comes to child tax credits, they both agree that it's necessary. With this set to expire, and if you have kids, especially under the age of 17, like Corey, and I'm almost out of that age under 17, there's a benefit from $2,000 versus a $1,000 tax credit, and that's not a deduction. That's actual credit. That's like, here is $2,000 for every kid that you have. People like those. Those are a lot stronger than a tax deduction. So this is the kind of thing that's going to be discussed with this administration and being fully aligned actually with Republicans. So it can pass. I mean, there shouldn't be too much, but we don't know what else is going to be included. And I think most of us would agree raising kids is very expensive and we love tax credits anyway. So I think we all agree we love tax credits. So Corey, does that get you excited? You like tax credits?
Well, yeah, my little one turned 5 yesterday, and so we still got a decade plus of that. I'm counting on it.
Do you call them my little tax credit?
He has a shirt. They both have shirts that say the cutest tax credit. They do.
There you go. I like it. I like it. Now part of a tax credit, and this happens in other countries. I was reading about this in Australia, that they want to incentivize people to have more kids. So I don't know if that's, trust me, $2,000 does not put you in the positive for gains, but they want to certainly make it possible. Well, let me get to some.
You have enough of them. If you go more than 5, 8, it can add up.
Well, I don't know. Well, we'll see. You can start your own daycare too. So some very positive news yesterday. I know that we covered 2 days ago about the PPI, but yesterday the consumer inflation report came out, and it was good news, which is why the stock market screamed higher yesterday. I say screamed higher, up over 1%. That's why you see the S&P in the positive now. It was good news, and inflation up 2.9%. On an annual basis in December, and that was below expectation. And there was actually, we see the core CPI, they call it disinflation, which it went down because shelter or housing prices went down a little bit, a tiny bit. Now, keep in mind, we were in December, not the time that people buy a lot of houses. If you look at the housing price chart, it goes down in December and then goes back up in April and when time starts to buy. So, but it's good news. Anytime prices go down, certainly houses, which are pretty high right now, that's good for people trying to get into houses. Maybe not good if you're trying to sell one. But the other side is with the high interest rates, mortgage rates approaching 7% for a 30-year, that will also cause house prices to go down. But what I love, and this is one of my favorite charts when it comes out, is let's look at how that breaks down for inflation. And I know a couple days ago, Corey talked about eggs, but eggs up 37% year over year. That's a big chunk, right? So, your eggs are 1/3 more expensive. But then other things, juices, roast beef or beef roasts, dried beans, they're all up, 3%, which 3% would seem a reasonable inflation rate, somewhere around there. Food away from home, there you go, 3.7%. And here's where you get some disinflation, where energy actually went down 0.5%, so that's good news. This one kind of surprised me, Corey. Video discs, like, who buys video discs anymore? I think I gave away mine like 5 years ago. I still see them in the Walmart bin for sale for like $5, but they went up in price. And other media, I mean, everything's streamed as far as I'm concerned. Pet services up, cigarettes went up, airline fares, college textbooks, all went up. So, prices are always going up. But when you look at this overall chart, and this is the key chart. So in 2022, when inflation touched 9%, that's awful. And that's also why the stock market took a beating in 2022. But you can see it's come down. The Fed would like this to be more in the 2 to 2.5 range. And even though it went up to 2.9%, that's less than what they expected. And that's the key, is what do they expect? And you can see the overall, without food and energy, it continues on that downtrend. So tonight we'll have our Ankerstar Wealth first quarter update. I'll be talking a lot about inflation and where the Fed stands on this. So, if you get that invite, feel free to hop on and you can ask some questions there. With that, Corey, you saw the CPI came out yesterday. Go ahead and talk to us about how the bond market reacted.
Yeah, so definitely good news, and good news on the bond side as well. Let me grab that chart for you, and let me know if I cut out, please. My internet's a little, it's not doing as well as the bond and stock market were since yesterday. Okay, so the 10-year, as that so there were some real fears being baked in around inflation or an unexpected high inflation rate. And we are seeing some commodity pressures upward if you just kind of go commodity by commodity, but that's kind of current, and inflation is sort of backward looking, CPI. So I don't know that all of that's gone, but at least for now, you saw the 10-year. Well, here, I think this says it perfect up here. On Thursday, we're holding a 14 basis point plunge from that prior session. So that's good. That's really good. Anything below 5 is not going to be viewed as really detrimental to stock or equity valuations. I did also just want to mention, so if we can keep those inflation fears at bay, then the real focus is going to be on earnings. I mean, that earnings season started yesterday. I think we're getting, I know we're getting a large majority of the S&P 500 this month, but I don't know the exact percent. So those banks coming out strong yesterday, TSMC this morning, very strong, and you're seeing kind of the chip complex, the NVIDIAs, the ASML, you're seeing some strength out there in that part of the market. So all good there. Tomorrow, more financials. And then next week, we start with some of those other companies. You get a Netflix, you get, some people like looking at the railroads, and but of course, all eyes are on big tech, throughout the rest of the month. If those companies put up good numbers, it's because of the market cap weighted index that we follow, the S&P 500. If they put up good numbers, it's going to be really, really hard to send this market materially lower in the short term. So that's kind of what we're watching. Mike, do you have any names out there on this chart that maybe they're not mainstream, but you like to, follow them quarter to quarter?
Oh yeah, I mean, there's some interesting ones like Roblox I see on there, ARM, which is one of our ego stocks on February 5th. Obviously the Tesla, Meta, Apple, Microsoft. I mean, those are the big ones. I mean, I will say with quarterly earnings, while we watch this and we listen to parts of this, I mean, we can't listen to all of these things, but it's almost like a quarterly report card on your kid. Just because, if somebody misses earnings in one quarter, it's just like your kid, if they get a bad grade on one quarter, they're not failing out of high school. We're looking at the long-term trend, but somebody has to have a report card to say how things are going, so you don't find yourself making a decision over 5 years getting surprised. So I'll just say that we watch this, and I want to say last summer it was like 75% of the time they beat earnings. I'm just making up a number that I kind of remember. So when somebody misses, sometimes that provides a buying opportunity. The market may like I know that last summer Meta had a miss. Maybe it was the second quarter. They had a miss, and it was a buying opportunity. As Zuckerberg threw in the sink, things are terrible, blah 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 blah. And we said, that's a good time to buy some more because the stock sold off quite a bit. And since then, if you look at since that drop, it's totally come back and a whole lot more. So a lot of times I look at these things as buying opportunities, but as you can see, every day there's news coming out. And I would say that the general investor, don't get hung up on tracking this stuff day by day or trying to trade off of it. So that's what I would say, Corey. I do see some of my old companies there, so I'm hoping for my old companies, coworkers, I hope they do well when they come out with their earnings. So,
absolutely.
With that, we will talk to you guys all tomorrow or Monday. Actually, Monday will be a holiday, so but we'll talk to you soon. Have a good one. Bye.